Hello everyone, welcome to today's backtest. And today's backtest is going to be on this up close candle right here. This is the daily time frame on March 16th. That is on Monday. Backtest for Monday. So we're going to go through the ICT 2022 model that took place on this very day. So it's a very short trade and it took place on the 1 minute time frame. So I won't have to waste my time. I just want to I want to discuss about the breaker. So we'll be talking about the breaker. So you know the other block and the fair value gap. And some of you even know breaker. Those of you who are familiar with ICT's concept, Michael Huddleston concept, okay, you already know the breaker. But for the sake of back test, okay, since I'm going to be using it on my back test as well. So I have to explain what the breaker is and how to identify the breaker, also how to use the breaker while trading the 2022 model. So this is the run up. The run up took place inside this orange rectangle extended. This is a March first. This is the first presented fair value gap for the first trading day of March. And I told you I keep this on my charts for the whole of March. Okay. And this yellow rectangle right here, this is the Monday's first presented fair value gap. So this is the first presented fair value gap that was created for that very day. And the trading, okay, the 2022 model trade that took place, okay, this is just it right here. This is the range, okay. So you can see the candle staying at inside this Monday's first presented fair value gap. So dropping down into the 1 minute time frame. Okay, so this is the runs that were being taken out. This low, this low, this lows, this low, this low. Okay, they were being taken out. Even this one right here, this was taken out. But this is the one our eyes will normally capture. So these are sell side liquidity. Let me annotate this quickly. Sell side liquidity taking. And you can see this sell side was taken exactly at the market open. Okay, so the market open for the New York M session is 9:30, and exactly at the 9:30 candle, after it created, it ran down to take out these lows. Okay, to take out stops from these lows, and it rallied up. Okay, it rallied up, reaching the upper quadrant of this March 1st presented fair value gap, came down to this level, run up again, and kept going higher until it finally stopping at the, you can see this new week open gap right here. Let me make this so you can see it clearly. Okay, you can see price stopping at the new week open gap. Maybe if I take this to 15-minute chart, you see this clearly. Okay, so this is a new week open gap for February 16th high. This is a new week open gap for February 16th low. And you can see how the markets, how the body of the candles, not the wick. The wick went above it. The body of the candle staying inside this new week open gap. Okay, respecting it. Like I said, these levels are really important. So the breaker, let's drop down into the 1 minute time frame. That's where you see the breaker clearly. So me showing you the breaker on the 1 minute time frame doesn't mean it only forms on the 1 minute time frame. No, it forms on different time frame, on the 1 minute, 2 minute, 3, 4, 5, 15, 30, 1 hour, even on the daily sometimes. So first, let's define a breaker. What's a breaker? A breaker, okay, so we'll be discussing the bullish breaker because right here, a bullish breaker was actually made use of. Okay, at this point, a bullish breaker was made use of to run up. So we'll be discussing the bullish breaker. So we'll be talking about a bit on the bearish breaker as well. So what's a bearish breaker? First off, a bearish breaker is a bearish range or a down close candle, which means it can be a range of candle, maybe two ranges or three range of candle, four, whatever, or it can be a single candle. Okay, so a bearish breaker, so you can write this down. Okay, this is actually ICT's definition of breaker from its core content. Okay, so a bearish breaker is a bearish range or a down close candle in the most recent swing low prior to an old high being violated. Okay, why a bullish breaker is the opposite of the bearish breaker, which we are going to discuss right here. And I'm going to break down the definition so you understand what I'm trying to explain. Okay, so a bullish breaker is a bullish range or an up close candle in the most recent swing high prior to an old low being violated. Now, what does that definition mean? Okay, so first I said it is a bullish range. You see this bullish range right here, this up close candle. One, two, three, four. This is a bullish range. Okay, it is a bullish range or an up close candle. So it can be this bullish range or this up close candle right here. This up close candle right here. A bullish range or an up close candle in the most recent swing high. This is a swing high. Okay, so the bullish range or the up close candle in the most recent swing high, this swing high right here. Okay, prior to an old low being violated. That's before an old low is being violated. Before these lows are being violated, okay, the high, the up close candle, okay, or the bullish range in the most recent swing high, sorry, in the most recent swing high before an old low is being violated. I'll say it again. A, a bullish breaker is an up close candle, okay, or a bullish range in the most recent swing high before an old low is being violated. So this is a breaker, or you can identify this range as a breaker. Why? Because this up close candle, this up close candle is the last up close candle before we see this run down in price to violate this low. Okay, and this bullish range was actually the last bullish range before there was there was this run down in price to take out these lows. Okay, so this is a breaker, or this range in candle, this bullish range is a breaker. So how does this breaker work? Okay, so after this up close candle, or this range, this bullish range of up close candles, okay, before this down close candle is being violated, and then you'll see this displacement upward in price. Okay, so you anticipate price to go down. Okay, normally if there was a fair value gap right here, okay, would anticipate price to rally down to the gap, right? For some of you who are used to the fair value gap, okay, you assume that there is no trade right here, okay, but there is actually trade to take at this point where price is running down. Okay, so this also is an order block. If you move to an higher time frame slightly, so you see this on the 3 minute time frame, this is actually an order block. Okay, so you can also use the order block as an entry in price. Okay, and you see price trading into this order block. And also, apart from that, on the 3 minute time frame, you can also spot this fair value gap right here. It was not visible on the 1 minute time frame, but it's visible on the 3 minute time frame. But that's not our discussion. Our discussion is the breaker, and how price makes use of the breaker. So how is price going to make use of the breaker to rally up? So like I said, this is the last bullish range before it dropped down in price to take out these lows. So this a breaker, or this is a breaker. So let's bring this out. Okay, so this range of candle is a breaker. And you see price trading down into them. So you can use this as your entry, your stop loss below this low right here. And this up close candle right here, this last up close candle can also be your breaker as well. And you see price dropping down into it also. So you can use this as your entry, also your stop loss below these lows, this low. This breaker can also be refined. What do I mean by that? Okay, we can also spot these up close candles before this final drop down in price. Okay, so this is also a breaker. So let me bring this out. Here's a breaker. You can see price dropping slightly into it. Okay, to rally up. So I'll be showing you this on other backtests where price drops into a fair value gap. I'll show you how price makes use of the breaker as well, and how price makes use of the other block. So you must not actually make use of the three of them. Okay, you might just practice one or pick two and try to be good at it, and try to, like, you should try to get used to those ones. Okay, try to master them so that anytime you see them in price, you'll be able to identify them on any time frame at all. On a 1 minute, 5 minutes, 30, 15, 1 hour time frame, you can be able to identify them. So now going to the 3 minute time frame, where we're able to spot the other block and the fair value gap, and we say this down close candle right here is the other block which price has traded down into, and we also drew the fair value gap, the high of this candle and the low of this candle. So right here, where is the breaker found? Okay, so this is a breaker. Okay, this is the last up close candle, okay, on this swing guy right here before price rallied down to take out this low. So this is a breaker. So if I bring this out, okay, you see how price dropped down into it. Why still, why dropping down into this fair value gap, and this other block is dropping down into the breaker as well. So you must not actually make use of this as an entry, model, but more this can add more confirmations to your trade. So let's say I'm using the fair value gap as an entry for this particular trade right here. This is the gap, this is the fair value gap. Okay, so once I see that, okay, my price is dropping down into this fair value gap, there is also an other block right here in price, which price has dropped down into, and also I can identify this breaker. Okay, I'll be very confident that after price drops down into this gap, it will rally upward, right? Because there are different confirmations there in price. So I'll be going to the 5 minute time frame before I end the video. So we identify the breaker there, and to prove to you that you can actually spot this on different time frames. So there's the 5 minute time frame, and you can pause the video and identify the breaker. Okay, so the breaker is the up close candle before the run down in price to violate this low right here. Okay, the last up close candle before the run down in price, that's the breaker. So pause the video and identify the breaker yourself. To 3, 2, and 1. Okay, so this is the breaker. This is very obvious. This is a very obvious one. Okay, this is actually the only upclose candle around this particular uh, range before this drop down in price. So this is the breaker, and this our price made use of it. Okay, breaker block. So you see price dropping down into it. Also on the 5 minute time frame, you can see a large fair value gap as well. Then we can see this other block right here, this down close candle accompanied with this up close candle. So this down close candle is an order block, but price didn't drop to the body, it just dropped into the wick. So I hope you found this insightful. Drop a like, subscribe, turn on the notification bell. There'll be more videos coming in. Have a good week and see you next time.